Well, looking at the market today, falling back in today's trading session, down 0.22%. But like I said a little earlier, we have seen the market in positive territory over the past 2 days. What went wrong today?
Well, I think at this point, there's going to be a bit of slowdown, and largely what's going to be sustained in terms of value is foreign investor-driven stocks. The liquid large cap companies. What will probably fall backwards is perhaps the smaller caps where foreign investors' participation is not so high, largely because local investors are trying to take a conservative position right before inflation. Right before elections.
And what's your strategy right now in terms of the stock market?
Well, we're again same issue. We'll probably be taking positions in the large caps that seem undervalued, and perhaps move a bit to the debt markets just to protect capital ahead of the elections.
And looking at some of the results that came out, CFC Stanbic Bank, 9 months of profit up 36%. Is that the kind of results that you had expected? We have seen a number of banks now reporting some rather positive results on that front.
Yeah, most large banks in Kenya are producing good results simply because of better margins as a result of sticky interest rates, in terms of what they lent. And in terms of customer deposits, they're able to manage that better because now the interest rates are dropping downwards. So now that dynamic helps them a lot. And then of course the flatness of the inflation manages their cost as well. So we're going to see good results going forward. Our only concern was because of earlier in the year we had high interest rates, which could have exposed to NPLs, high NPLs. So now that's being, I think banks have come through that unscathed, and going forward, I think everything will be good.
And we also had NIC Bank out with results in today's trading session as well. We saw profit also jumping by 33%, or pre-tax profit jumping by 33%. What did you make of those results?
Because we're investors there, we were a bit happy on that.
Yeah.
but I guess you could see it coming. Largely, NIC has been a strong performer through, if you look at it historically. So it's good interest rates. They kept their interest rates. Okay, they didn't manage to keep them so low, but because of the size of the differentials, it was manageable. So overall, the numbers seem to favor, in interest income versus interest expense. I think they did pretty well, and on interest income did equally well. So fantastic result. We expect that to start filtering through to the company's numbers soon. Because actually, when I was leaving the office, I had a chance to look at. the book value. It has grown pretty substantially, and that was a pleasant surprise. So it looks like now it's trading just slightly above book value, maybe 1.5 times above, 1.34 times above book value. So that represents deep value for us going forward. Probably we'll be looking to take a stronger position in that stock.
So that's one of your favorite within the banking sector. Talk us through the company's expansion plans. We know that in August, the CEO announced that it wanted to expand some of this branch network throughout Kenya.
Yes, obviously Kenya is still largely unbanked as compared to other markets. So there's still opportunity on that front. They've got very good products in terms of asset finance. That's probably what they're known for. They are largely a niche bank, developed a bit of expertise in SME financing, and of course their investment banking business has also been doing pretty well. So I guess, like I said earlier, going forward looks like a strong counter.
Well, looking at the shilling in today's trading session, could you guys give us your outlook for the local currency?
Well, we've always said that it's largely dependent upon the central bank. And from our readings, we've been seeing that in terms of money growth, broad money growth, it's back to, shall we say, normal, because after the tight money supply stance, tight monetary stance earlier in the year, it has pretty much gone back to where it was from March, April, thereabouts. So we taking a look at what the dollar is doing, and the easing stance that they've taken. There's a good chance that we'll be seeing 85 for a long time. But we expect gradually the shilling to depreciate further to maybe about 90 by end of next year.